I'm going to show you why the current bear market panic at 59, 60,000, with Bitcoin now touching the lower bound of a decade-old valuation model, looks almost identical to what I've lived through 3 times before and what happened every single time after moments like this. The reason you should listen to me is I've been in Bitcoin over 12 years, watched it crash 93%, 84%, and 77% from its highs, and I held through all of them. And every time, the people who kept their heads were the ones who came out ahead. I'll deliver it by walking you through the emotional pattern of bear markets, a few key data points including the power law touch, and what I plan to do from here. Bitcoin just touched 59,000. It's down more than 50% from the all-time high of 126,000 last October. Fear and greed index sitting in deep, extreme fear. ETFs have bled billions, and my social media feeds are full of people saying that Bitcoin is dead, the cycle is broken, or the cycle is intact and it's going to 42K and the bull market is over, which that last part is true. But there's something else going on right now that I want to flag immediately because it's significant. At 59,000, Bitcoin just touched the bottom of the power law model, a long-term valuation framework that's tracked Bitcoin's price for over a decade. And that's a significant thing. I'll explain what it means in a minute. First, I want to talk to you directly about why I'm not panicking, what I've learned from living through these past bear markets, and what I think people need to hear right now. Now, I've heard all this before, literally, almost word for word, 3 times. So the emotional pattern looks like this. Every bear market in Bitcoin's history has followed the same kind of pattern. And I don't mean the chart pattern, but more what it feels like to live through one. It starts with denial. Price drops 20 or 30% from the high, and people say it's just healthy correction. They point to the last dip that bounced and assume this will be the same. Then there becomes like a slow bleed. The price doesn't bounce. It grinds lower or sideways for weeks and then months. Conversations shift. People stop talking about targets, start talking about support levels. Then comes the panic. Something triggers a sharp drop. Maybe this cycle it's ETF outflows. Maybe it's a geopolitical event or just one too many red candles. Suddenly, everyone's certain it's going to zero. Fear and greed index goes down to single digits or low double digits. Comment sections are full of people who bought at the top, swearing they'll never touch Bitcoin again. And then quietly, while all this is happening and things seem like it can't get any worse, the bottom starts forming. Not with a dramatic green candle or a big news headline. It forms at some point while everyone's still terrified and claiming Bitcoin's dead. The pattern played out in 2015 with the fall from 1,100 to 200, played out in 2018 from 20,000 to 3,200, and in 2022 when it fell from 69,000 to 15,000. And I believe it's playing out right now with Bitcoin down from 126K to 59K. The numbers change every cycle, although they're bigger, both to the up and downside. But the feeling really doesn't. Although I have to admit, this cycle feels a little different in the sense that the panic and fear and FUD is even more extreme than it has been in the past. At least it feels that way to me. Even though the drawdown has been less significant, at least in percentage terms, from the peak. So where we are right now, I'm not going to bury you in charts and indicators. If you want that deep, more technical breakdown, I did a whole video on the 3 bottom signals that just fired. Go and watch that one. But here are the key things I want you to know, including this new one. First, the power law model. It's a framework that's been tracking Bitcoin's price against time on a logarithmic scale for over a decade, built originally by physicist Giovanni Santostasi. It has a long-term trend line and upper and lower bands around it, with the upper bands being where Bitcoin might peak at the most extreme and the lower bands being where it might bottom at the most extreme. At 59,000, Bitcoin touched the lower boundary of that corridor. And according to Santostasi's own numbers, the model's long-term trend sits closer to 120,000 to 135,000 in that range, which means we're trading more than 50% below the model's central estimate in territory that's only happened a couple of times in Bitcoin's entire history. And that would be 2015, 2020, and 22. Those are the closest comparisons to where we're at right now. The model would only be considered broken if Bitcoin traded below roughly 17,000 for over a year. And we're nowhere near that. Although, to be clear, to breach that lower bound would only have to go beneath 59,000 for a time. But what we're looking at instead is one of the cheapest readings relative to that long-term trend that this model has ever recorded. Second, Bitcoin briefly lost the 200-week moving average, which sits just beneath 62,000 right now, and is still below that as of the time of this recording. That level is marked or been near the bear market bottom in every single prior cycle. It doesn't always hold perfectly. In 2022, Bitcoin spent several months below it before bottoming, so a temporary break isn't unprecedented, although it is kind of unusual. Historically, time spent below this line has always resolved with price recovering above it again, and has always been one of the best possible buying opportunities. And third, more than half of all Bitcoin in existence is currently held at a loss. That means the majority of holders are underwater. Sounds terrible, and it is painful for a lot of people, but it's only happened at major cycle bottoms. Weak hands have already sold. The people still holding at a loss are the ones who aren't going to sell. And fourth, long-term holders just posted their largest 30-day accumulation on record. The most patient, most experienced capital in the market is buying more aggressively right now than at any point in Bitcoin's history. These are wallets that survived 2018 and 2022. They're not guessing. They've done this before. They understand what's going on and where we're at in the cycle. Now, what I plan to do, I'm not going to get into too much detail here, but I will say I'm not selling, I'm not panicking, and I'm also not trying to time the exact bottom because that just doesn't work. Nobody can do it consistently. And when you see or hear these gurus claiming, hey, I've timed every major market bottom and top for the last 11 years or whatever it is, don't believe them because that's not true. No one can do that. It's possible to get close in an approximate way. I mean, you can tell that we're near or that the zone is here, but anyone saying they picked the exact number or date is just lying. The one thing I've learned from 12 years in this market is that the best time to buy has always been when it felt the worst, not when it felt the best, not when everyone on Twitter was celebrating new highs, but when people were scared and certain it was over. While this is not financial advice, this is just my observations on the market and my commentary strictly for informational purposes. In 2018, at 3,200, people told me Bitcoin was a failed experiment. 2 years later, it was at 60,000. 2022, at 15,000, people told me the whole industry was dead and that it was going to 10,000. And just 2 years later, it hit, well, 3 years later, it hit 126,000. And every time the people who stayed calm and kept accumulating, kept dollar cost averaging, wound up changing their financial lives. I'm not saying this time will be identical necessarily, but I'm saying the pattern has repeated enough times that I trust it more than I trust a panic. And one thing I want to go over real quick is the returns, the average returns across the instance of when Bitcoin has crossed the 200-day moving average. So on a 3-month basis, the average return from the time the 200-week moving average is broken, 3 months after that, average return is 37%. 6 months after that's 89%. 12 months after that's 418%. And 24 months, so 2 years after that, it's 531%. So that gives you an idea of the kind of buying opportunity that could be present right now, potentially. So to close out, if you're watching this in the middle of a bear market and you're feeling uncertain, I get it. I've been there. That's the point. Bear markets are designed to make you feel that way. And it's why the weak hands and a lot of retail investors tend to panic sell around this time if they haven't already. But if you zoom out and look at the history, I think you can make a better informed decision that way. And if this helped, hit like and subscribe. Share it with someone who needs to hear it right now. Check out the Bitcoin Blueprint if you want to learn Bitcoin simply and completely. There'll be a link in the description. And thanks for watching. I'll see you in the next one.